Good morning, everyone. Assalamu alaikum. We welcome you all for the analyst and the investor presentation for Al Madina Insurance Company, SAOG, for H1 2024 results. Before we start the meeting, I will start with the introduction. My name is Zitesh Popat. I'm heading the finance department as well as handling the investment relation officer of the company. With me, we have our Deputy CEO, Mr. Shakib Mahmood, our Head of Operation, Mr. Anish Varghese, and Manager Finance, Heather. We would like to thank MSX and FSA for providing us this opportunity where we can interact with the investors. We have a brief agenda for today, where we will be covering the company overview, presenting the company past performance snapshot, highlighting the H1 2024 results, outlook, followed by a Q&A session. With this, I would like to hand over the floor to our Deputy CEO, Mr. Shakib, who will give a brief about the company overview.
Thank you very much. Salam alaikum to you all, and welcome to this dialogue between the investors and the management of the company. It's a very good tool, actually, for you to ask questions and know about the company. Although our company has been, if you have been tracking, a very, very consistently performing company. We don't give you surprises. We don't like surprises. The only thing we like is the profitability and the dividend to our shareholders. And as you would have noticed, we have already given almost 60% of the capital back to the shareholders over the years. Let me take you through the vision, mission, and values of the company. The vision of the company is that we want to be the leader in the insurance sector in Sultanate of Oman, and not only the Takaful space, although Takaful has its own limitations, Takaful has own restrictions, but we want to take on that challenge and be the leader in the insurance industry in terms of the profitability for its stakeholder, satisfaction of its customer, commitments to its employee. And you would notice that our vision is not growth in the top line. Our vision is not we will be in terms of the revenue the biggest. That's not our vision. Our vision is solely focused on three things: customers, employees, and shareholders. And so the profitability plays a very important role. The mission is to provide the cost-effective insurance solution and superior customer service in a manner that is compliant with Sharia. So here, very important is that they have to be cost-effective. And when I say cost-effective, it doesn't mean cheap. We are not cheap insurer. We want to give you cost-effectiveness and the value for your money in terms of the superior customer service, the time that we settle the claims, etc. And I would like to bring to your notice at this stage that we are the company which has settled probably the biggest claim in the history of insurance industry in Oman. And within no time, without any complaints, without any problem. And we have to be Sharia compliant. We do not do anything which is against Sharia because we are Takaful. The value system inculcated in our company is innovation. We always go for the new product, social responsibility, transparency in everything we do. And we welcome people to ask us questions and see what we are doing. Integrity of our people and teamwork. So this is what the vision, mission, and values of the company is. As you all know, the company started its journey back in 2006 as the Al Madina Insurance Company, a conventional insurer, and then decided to become a fully fledged Takaful insurer in 2014. And at that time, this was the first. Not that time, even now, this is the first Takaful company in Oman. So we also contributed in terms of the forming of the regulations and dealing with the regulator, etc. So we have a good handle on the regulations which were done. We write mixed businesses, general health and Takaful life. Al Madina has now grown to a company of about $111 million, and it's always in top 5 companies in terms of the top line. Although, as I told you, we are not top line hungry or top line focused company. we look at the profitability from the operations first and then overall profitability. We were till last year among only 2 or 3 companies which were making operational profits. So rest all companies in Oman were not operationally profitable. I don't want to take names, but that's how it is. The company has a very balanced portfolio across all lines. We are primarily a corporate insurer, but we do government business as well as personal lines. And the company has 7 branches, 2 kiosks across Sultanate of Oman. And I've already told you we are the first Takaful company in Sultanate of Oman with a capital of 17.5 million, which is about 45.5 million USD, as against a minimum requirement of 10 million. So we are a very well capitalized company. And you would note, if you have been following the company from the inception, that the company as a startup was a loss-making company. And at one stage, when it was a conventional company, the company had to write off 5 million of its capital against the accumulated losses. But after it became a Takaful company and change in the management, we have been a very profitable company, not only giving dividends to the shareholder, but also multiplying our reserves, all sorts of reserves, and having book value of a share of about 128 better. I'm surprised why market does not reflect that reality, because on the one side, you're getting 60% dividend over 8 years. You have a book value which is 128 better. But the market value remains static. Maybe the liquidity is something the analysts who are listening to this conversation may have to think why this is happening. But anyways, that's the reality. And as I said, we strictly adhere to the Sharia principle. We have a Sharia board in place where the chairman is a Dawood Bakr, who is an authority in the space of Sharia, comes from Malaysia. Al Madina has remained consistently profitable, and I have probably not seen any quarter where our profitability has gone down. We are slightly better every quarter and been paying dividend 8 years continuously and 9 years in all. This is the 18th year of the company if you include the conventional as well as the Takaful, and we are still evolving and growing. Anything you want to stop me and ask a question, I'm happy, or we do a question answer session later. As you all know, we are in the business of risk management, and we foster harmony with all our stakeholders. And within the company, our motto is everything is in harmony. We like the shareholder, the employee, the customer, everybody in harmony. So that's the main thing, the main theme. And we have already repeated that we are into this type of business. Is one of the largest energy, power, and corporate insurer in the market. That's our specialty. We build customer loyalty through exceptional experiences. At the time of Shaheen, we opened up the claim settlement hubs where Shaheen happens, the area which were most affected. And we have, as a result, we have a very happy customer base. One of the international brokers have been doing this survey for the last 2 years, and we have been getting the best ratings in the market, including the conventional insurers. In terms of the service, we are on the top, not average, not in Takaful, but in entire industry, we get the best rating. Recently, we also got the Best Trusted Brand Award by international organization, although awards are not really awards unless your customers, your stakeholders, they are all benefiting from you. So that is a testimony. We are leading Takaful provider and partners with the major Islamic banks in Oman. Most of the banks we deal with. Wealth of experience in effectively managing diverse clientele across multiple industries. The main asset of this company is our people. And our people do not keep on shuffling in the market, actually. We are one of the best employer in the market available. Everybody is 10 years, 17 years, 20 years. So we have collectively experienced not only in the Asian subcontinent, but some of our people have experience in the Europe as well. So we have a very qualified underwriting team. So as a result, the underwriting is the first step in you making the profits in the insurance industry. If the underwriting goes wrong, you will always make losses. And it shows that the team is vigilant, and we do not have any complaints from the customers, yet we are profitable. Um, Efficient claim servicing, we have talked about. We do actuarial validation of reserves in line with the best industry practices. And with the advent of IFRS 17 for the conventional and FAS 42, 43 for the Takaful, the involvement of the actuary and actuarial validation will increase with time, and we will be applying FAS 42, 43 from 1st January 2025. So the first numbers which will come out as audited number will be 31st December 2025. Having said that, I do not see a big change in the numbers because of these standards. So I'm answering many of your questions as I go through, which will come later on. But by any means, it's not an attempt to preempt or not let you ask questions. Please ask questions. I love the questions. So, and me and my team will answer your questions. We are strongly committed to the in-country value. We do not do as many of the businesses are doing right now, that they just do a upfront and then deal with people outside. And we have raised those sorts of things with various industry regulators and the bodies which are regulating them. We are Omanized enough, actually in excess of what is required by the regulation. We have a program to recruit and train Omani nationals. We take every year or every half year trainees from the market. We train them under Bina program and see if they are fitting into and they have the aptitude. We absorb them in our company. That program is going on. Our own Omanis who have been with us for some time, we have used external consultants, the international consultants, to do leadership program for them. So their competencies are evaluated. Thank you, Anish. And if they are fitting into those criteria, they put into some other programs to develop their leadership skills. One of our employees has gone overseas, an Omani gentleman, to do the CEO training. So we are trying and shape up the future of the country and the Omanization. We like to retain, and we do retain businesses in Oman. We do not give it outside, except for where we have to do the insurances. Providing ICV through CSR, companies very active in the CSR activities. More than 90% of our investments are within Oman. So we like the economy to grow. We like to plow back the profits within the economy. Unless we do not have any option, then only we go outside. I will now hand over this presentation to my colleague Hitesh Popat, who is the head of the finance. He will take this through. But by all means, I'm available for any questions and answers. We'll take you through. Hitesh, please.
Thank you, Mr. Shakib. Before we go to the H1 2024 results, I would just like to give a snapshot of how the company has been performing over the previous years. The key parameters such as the gross written contribution. Company has been significantly growing in that area, where in 2017, the gross written contributions were 30 million. To 2022, we have increased our business to 45 million. In 2023, the company took a strategic decision where we reduced our gross contribution in order to maintain profitability, which is well evident in the next graph, where the underwriting surplus of the company has improved in 2022, which was 6.7 million, to 2023 to almost 7 million, despite the dip in the gross contribution. So the strategy for the company has worked well. In terms of investment income, there are limitations in the Sharia space. Despite that, the company has been doing well and increased our investment income to 1.4 million as of 2023. As a result of which, the profit before tax has increased from 2017, which was 681, to almost 1.7 million in 2023.
I think point here to add on is you see a spike in 2020, and one would say there was a spike and then you went down. All of you know this is the COVID year, and COVID year was particularly good for the insurance industry because there were not any cars on the road. There are not people going to the health providers. So the loss ratios have gone down, very, very significantly. That's the reason there's one spike. Otherwise, if you ignore that, the profitability is continuously increasing. Yes.
Yeah. Moving on to the next slide is the dividend payout and the return to the shareholders. The company adopts a well-balanced dividend payout policy where the distribution of profit is done to the shareholders on a yearly basis, consistently for the past 8 years. Al Madina has almost returned around 10 million as paid out as dividend to the shareholders, which is almost 57.5% return of the capital in the financial year 2023. This shows the continuous financial strength of the company has been having. As a Takaful company, we need to ensure and balance the shareholder fund as well as policyholder fund together, seeing that both the funds are in profit. For the past 7 years, the company has been reporting surplus in shareholder fund as well as a policyholder fund. Shows the accumulated position, which is the balance sheet number of the participant fund. In 2019, this participant fund has accumulated deficit of 6.2 million. The company has strategically and systematically planned for the reducing the deficit, whereas it has moved from 6.2 million to 907,000 in 2020, 469,000 in 2021. In 2022, it was only 146. And when we ended the year 2023, the participant fund accumulated position has come into a surplus of 8,000. So this is a significant accomplishment, not only in Oman, but on regional basis, because most of the time in Takaful companies, you will see the shareholder fund is in profit, but the participant fund is in accumulated losses.
Yeah, this is a rare phenomenon. It's like a blue moon in Takaful industry. If you see the region, and I've been looking at the regional numbers as well, most people do from one pocket to another, i.e. charge more wakala fees to the participant fund and put the profit in the shareholders account so that when the shareholder balance sheet is seen, you see accumulated profits and the share moved on based on that. Here, I think a word of advice to the analysts, we should look the balance sheet in totality because ultimately it's one person's two pockets. We have maintained, if you see from 2016 onward, that our both accounts are profitable in terms of the profit and loss account and accumulated losses which were there earlier. We just reduce everything systematically and come into the profitability position. In Oman, if you see the competitors do have a different picture altogether.
In terms of solvency margin, on a consistent basis, the company has maintained the surplus well above the minimum regulatory requirement. In the year 2023, the risk-based solvency has been implemented, and I'm happy to say that even in the new regime, the company continues to maintain solvency in all line of business, even after implementing the new risk-based solvency. So which is showing on the financial strength and the strongness of the company.
It shows two things, actually. It shows as the Desh rightly mentioned, the financial strength and solid resources of the company. Secondly, it shows that the company is not taking undue risks. Because if you're taking undue risks, you would use your available capital to the full. And one would say there are some capital which is redundant. You're not actually using that for the insurance purposes. Yeah, that's correct. That's part of our strategy because we want to take businesses which make profits for the shareholders.
Moving on to the H1 2024 results. The company achieved another successful quarter where the company achieved a gross contribution of 26 million, a 43% increase as compared to the previous period. The net earned contribution also grew by 26% in line with the growth of gross contribution and also retaining of some profitable lines on our net. The claims have increased by 36% on account of various Nat Cat events which have occurred. Despite the increase in the incurred claim, there has been an increase in the underwriting surplus from 3.5 million to almost 3.9 million. As a result of which, the total profit of the company has grown by 6% as compared to the previous period. Moving on to the contribution mix, business mix of the company, Al Madina continues to maintain a well-balanced portfolio across all lines of business. We continue to be more stronger on the technical side due to our technical expertise and underwriting bench, followed by the motor, medical, and life. With our focused sales strategy, we have been able to achieve 43% growth on year-on-year basis. Also, there has been a significant improvement in our market share, which was around 5% in 2023. Now it has grown to almost 9% as of H1 2024. So all in all, these strategies and the planning has been working well in favor of the right direction of the company. Moving on to the key performance indicators, the retention ratio stands at 39.4%. There has been an increase in the loss ratio from 52 to 56%. The expense ratio has been maintained, has come down from 43 to 39%. The combined ratio, which is a result of loss ratio and expense, has been well managed and maintained by the company at 96%. So this is one area where the company has been managing its ratio in terms with the best industry practices.
I think the loss ratio have increased, and that should be a cause of concern for any insurance company. And the combined ratio should always be less than 100 for sure, otherwise you won't make any profit. If it is 100%, then you are in loss. The gap between the combined ratio and 100 is what gives you the profitability. Here we have a loss ratio which has increased because of the rains which happened in April. And as a result, there were lots of new claims coming in. Inshallah, towards the year end, and if we don't have more cyclones and the rains, we are in the risk business, anything could happen, we will improve this and bring it down to 95.
Moving on to the investment composition, Al Madina follows a prudent investment strategy where majority of our investments are parked in the fixed deposits and the sukuk side. We continuously ensure that all our investments are continuously monitored for Sharia compliance and are well diversified across various asset classes. The investment income of the company has grown by 10% from 774 to 852 as of H1 2024. The company continuously looks at various opportunities in the Sharia space where we can leverage and see if we can increase our investment income, on the Sharia side and have positive returns for the shareholders as well as policyholders. In terms of balance sheet, our total assets are 119 million. Our total liabilities are well controlled at 98 million. The share capital continues to be at 17.5 million, well above the minimum regulatory requirement. Legal reserve, retained earning and other reserves combined at 4.9 million. The total shareholders' equity is 22.4 million. The net assets for shareholders attributable as of H1 2024 is at 128 paisa. With regard to the implementation of new standard, FAS 43 and IFRS 17 equivalent, the effective date for the company is 1st Jan 2025. The company has already started working on the transition phase, and we are already in progress with the timelines. And we will ensure that the numbers are in line with the new standard and all the timelines are met.
Thank you, Hitesh. I think I would request now my colleague Anish, who is the head of insurance operation, to take you through on the outlook of the company for future. Anish.
Yeah. Hi, good morning, everyone. As we have seen a very good half-yearly result, we expect to have a very stable and positive outlook for the remaining period of the year. We have seen a stable and steady growth in the insurance segment, mainly because of the healthy oil price, and government has announced many major projects in the market. This all helped the insurance industry to show a stable growth, and it will continue in the remaining period as well. Again, Al Madina, we have tied up with the various banks, particularly Islamic banks, and which we believe that it will bring more and more additional business, profitable business to the company. Then when it comes to our plans on products and services, actually we expect unified health insurance policies will be launched very soon. If FSA complete all the formalities, hopefully it will be implemented by fourth quarter. And once it implemented, it will give a boost to the health insurance sector, and definitely the health insurance sector will grow further significantly. Al Madina, again, we strengthened our distribution channel. We have opened one more kiosk in the last quarter, and we have strengthened our marketing team. So this all will bring again the profitable business to the company. Al Madina invested in our digital segment in order to provide very superior service to our customers, as well as to increase our reach and visibility across the region. When it comes to our strategy, all the strategic points were prepared based on in order to deliver the expected result to all our stakeholders. Be it our shareholders, we ensure to provide continuous dividend. If it is customers, we will ensure to provide a superior customer service. Again, to protect the interest of all the stakeholders associated with the Al Madina. Accordingly, we prepared our strategy, and the strategy is to maintain a stable growth always by focusing on increase in bottom line. Similarly, we will maintain our operational profit, and we will continue to increase the operational profit in the upcoming period through our strategic approach. Then continue to maintain and increase our market position by ensuring our bottom line is protected and increased, and by ensuring to deliver the result to all the stakeholders. Maybe as our Deputy CEO mentioned earlier, actually our strategies and our service to the customers and to the all stakeholders being recognized by CMO Asia, and Al Madina being awarded with a Brand Leadership Award of 2024 recently. So these are from our side, and we would be happy to answer any questions.
Hello, guys. Hello, team.
Yes.
I have put in some questions in the chat. Can you please answer?
Okay, maybe you can just introduce yourself first and ask your question.
Yeah,
you don't
sure.
mind.
So my name is Amit, and I'm an ally of Nitika Gupta from Ubhar Capital.
Okay, Amit. Yes.
Yeah. So actually, I have three basic questions. Starting with the company has reported 43% year-on-year growth in the first half 2024. So what are the key performance indicators there, and which segment has contributed the most?
Actually, Amit, 43% growth is across the line of businesses. And
Right.
as you have seen, and there was a chart shown by Hitesh, how our contribution comes from which segments. It shows the technical number one, then motor, and followed by the others. More than that information, I wouldn't want to disclose in this forum because this is confidential information.
Okay, understood. Thank you. And can you talk about the reinsurance pricing in the country? And has there been any event that had happened in 3Q24 till date which might have bad impact on the reinsurance pricing for 3Q24?
Yeah, as you know, possibly, and that's why your question is coming. There are so many net cats which are happening, natural catastrophes in Oman. Right from the time of Gonu, we always have every year something or the other which hits the Omani weather conditions, and hence the insurance industry. As a result, lots of insurance companies have withdrawn capacities from the market, and the prices have gone up, i.e., they're asking for more premium and paying you lesser commission. Many of the things they don't want to give you, for example, if you had a quota share in surplus lines, they don't want to give you a surplus line now. You have to cover yourself up with the excess of loss and other structured products. So yes, it has been a very difficult time for the insurance industry, and the reinsurance pricing has gone up.
Okay, thank you. And do you have any update on the launch of mandatory health insurance, like from the regulator?
I think Anish covered it, but I'll ask Anish to further say something.
Actually, implementation process is going in a faster phase now. It is primarily from the regulator side, FSA. Currently, they are empanelling all the providers into the Damani system. And we expect, if everything goes well, by early Q4, mandatory health insurance will be launched. But again, ultimately, it's up to the regulator. But our expectation is it will happen by Q4 2024.
Okay, okay. Yeah, that's what I wanted to. Thanks a lot. Thank you so much.
Thank you, Amit. Anything else anybody would want to ask? We are happy to answer. Well, if there's no questions, thank you very much. And we'll see you in the next dialogue, which we'll have after 6 months.
Thank you, everyone.
Thank you.